On my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Ray Dinero, and we are back at it again. Special episode. It's a portfolio update coming at you. This will be hitting you Tuesday, first Tuesday of every month. We'll be doing the financial update, the cumulative one, the first Monday of every month. We'll follow it up with the portfolio update on Tuesday. Wednesday, obviously, you're going to have crypto portfolio updates. Thursday, you're going to have future financial strategies, whatever the dealer's choice is on what we're talking about that day. And then Friday, the first Friday of every month, you're going to have the Debt Crusher Bag Fortification Friday special. Beginning of the month is crazy busy. Actually, what I would say is the end of the month is crazy busy for me because I got to record all this stuff. So it's like that weekend or whatever, however much time I have till that first full week of the month, it's crunch time because I got a lot of reports to do. I got to do my end of month financials. I got to get you guys the numbers back. We're looking at the portfolio. We're jumping into all the portfolios. We're bringing the monies in. I got to look at my debt now, which is crazy. It's never fun to look at. You just want it gone. But as we're working down, you're constantly looking at it, measuring it, tracking it. That's how you find out what's going on with your financial situation and how you give yourself a little financial health checkup. You got to do what you don't want to do. So let's jump right into it. Obviously, this is the portfolio episode. It's a double-edged sword for me because I love doing these because we're moving in the right direction. Obviously, during the bull runs, everything's just better. I get to pump my chest while everybody tells me what's not going to work, how my tools that I choose to use are trash, but we get to talk about it and I get to post wins. So we'll be posting the L's too. So there'll be some times where those people get to come back around and be like, see, I told you, for small windows of time. But that aside, I'm really pleased with where we're headed. So let's jump right into it. Obviously, this is being recorded on the 2nd. So I didn't record until after the month was over. Honestly, I really wish I could have recorded the last day of the month so I could have beat my chest a little bit more. But we'll bring it to the stage because we do two things here. First thing is first, we're gonna show the receipts because a lot of you guys don't do this. So we're looking at the day change. Obviously, this is on a Saturday, so we got a day change of minus 3.4%. We got some hard swings over the past 6 months. We have had additions and appreciations totaling $10,865.18. It's a good, healthy 6-month climb because obviously we've been surging, we've been putting money in position. Got the income portfolio sitting here at just under $20,000. We're going to jump into that. There's stuff to look at there. We're also going to have some stuff to look at. Now, see this. So the total gain loss on here says I'm down 5%. I am not down 5% because this doesn't give you the actual total because it doesn't account for dividends in the Charles Schwab. But the day change, most of our 5% down is from this portfolio because this is where we are existing. You can see the positions they're in. We've got 1 share of fiat that I bought, 516 shares of Misty. We're going to be talking about what happened over the past month with that. We've got 4.1371 shares of QQQY, which some stuff's probably going to be going on with that coming here pretty soon. Ulti, we have 508 shares of, and YETH, we have 4 shares of. It's just going to show, I like to show this first because a lot of people will show you an angle of their portfolio that's not the real deal. Holyfield, they're not giving you the full receipts, which, whatever, that's on them. I'm not selling anything over here. I'm not selling an opinion. I am going straight fact-based. So, again, none of the strategies and none of the tools and none of the positions and none of the anything that I do am I emotionally tied to. So like the random comments about, oh, that product's trash, I don't like it, I don't care. I really don't. I don't. Because what we function with over here is what you should be functioning with if you're dealing in finance or anything math-based, which is math. That's all that matters. All we're talking about is efficiency and efficacy. And if you've got some strategy that you're emotionally tied to and you're just never actually going to get rich or get ahead financially, then that's on you. I don't care. Have fun staying poor. What we're focused on over here with these portfolios are their intended use. We're using the tools for what they're for. So while a tool might be trash for somebody who doesn't know how to use it, for instance, if you are a person who's not physically inclined as myself, a hammer might be trash for you because you don't know how to use it right. A multi-tool might be trash for you because you don't know how to use it right. But in my hands, it can help me fabricate an enclosure space. It can help me make a really nice hole. Or it can help me do a bunch of stuff. It can help me build a really nice box. I can do a bunch of stuff with tools that would be trash in the hands of somebody who doesn't know what they're doing. So for you to not understand a product and to blatantly get on there and not want to have a math-based efficacy conversation, I mean, that's your problem, because it doesn't make me wake up any poorer tomorrow, and it's not going to make me not do what I'm doing that mathematically is based and works either. Like those are two things that don't change. Booze don't stop dunks. So we're going to keep putting the numbers up over here. We're going to keep recording the journey. We're going to keep pivoting, making the adjustments as we see fit and as needed. But for this portfolio, the goal is income. So it's a whole bunch of high income dividend yielding ETFs. The intent is for this to produce income that funds other things. I'll reiterate, because I've said this a few times, and I'll actually start sharing these videos with my brethren on Reddit, because like I've actually started using Reddit. It's the first time I've ever been active on Reddit in my life. Like I've always gone over there to like find stuff, steal memes, all that fun stuff. But I've never been an active participant in the community until I got into this high yield dividend space. I mean, I didn't even go over on Reddit for crypto. I don't talk about crypto over on Reddit. And I've been involved in crypto for over a decade. It just doesn't, there aren't really fruitful conversations, and it's not like full disclosure conversations. So one of the things that I love about the high yield dividend community and the other high yield dividend investors that are documenting their journeys as well, such as shout out to Dividend Nomad. I'm going to give him a shout out. I'm going to tag him in the video, so hopefully he'll watch it. But the people that influence me, such as Dividend Nomad, that are having a conversation, that are tracking their portfolios, that are actually showing the receipts, is why I'm active on Reddit and I'm active in this community, because these people are having real conversations. And there's just people from the outside of the community looking in that want to come in and tell us everything that we're doing is garbage and none of this stuff works and it's just trash, even though we're posting the results. I'm not just showing you the Snowball Analytics account that I could fabricate to make it look any way that I wanted it to. I'm showing you the receipts to show you that these positions do exist in real life, in a real portfolio that is mine, that these income payments are coming in. And yeah, I mean, it's just wild to me that other people aren't having these conversations. And honestly, like, let's look at the transaction history so we can get that out of the way too. Because like I had one of my biggest payments this month. Let's go and find it. Where is it at? Where are you at, buddy? Where are you? Oh, here it is. Look at this. October 25th. I'm highlighting it for you. These things are actually happening. So like when I say booze don't stop dunks, this is what I'm talking about. Apparently these products are trash. This $2,099.05 was not trash. This month we had a total of almost $3,000 in dividend income. We were up $1,591 from last month. with the way that I accidentally did this. And we're going to actually talk about that as well. One of the things I did this month is we can talk about the move since we're in here, because like we can jump over into the snowball analytics. This is kind of the more important thing to see, in my opinion, but I like to show those receipts. One of the things that I did that was a major move this month was I went ahead and condensed down into Misty. Now, originally, I was looking at my phase one consisting of 3 positions. I have recently come to the conclusion that it should probably only be 2 positions. The reason being was one of my positions is Misty, and like I'd firmly solidified my decision to invest in Misty. And as I was trimming, because I considered myself, because Misty's a runner, it goes up. It's one of the few things, these products aren't made to go up, and I understand that. But Misty was running because MicroStrategy is running. They have their stock split. They've been running. I got in late on that. I thought I had more time. I didn't. So now we're scrambling to get our 10 shares of MicroStrategy before the year's out. But like, also, I got to fill this portfolio. I got to feed the machine. I got to get the income that I'm wanting out of it. And this month I was close. I told you I was going to start beating my chest at 1,500, and we flew right past that. On a whim, I knew that we were going to do well because Misty is one of the strongest payers, which was the reason I decided to go ahead and tax loss harvest my Tesla position, because I was under on that position. I was also under on my Coney position. Now, Coinbase stock, for whatever reason, is doing some weird performance things. Like, would I hold it in my long-term portfolio at this point? Me personally, no, because I only need 1 Bitcoin derivative stock in there, and MicroStrategy is the blatant winner on that to get Bitcoin exposure. So like, I really don't care about the exchange. Doesn't really matter to me. I'm not a big fan of centralized anything. So Coinbase is not one of those positions that I'm like, because the market doesn't know how to evaluate cryptocurrency stocks at all, in my opinion. Like, they don't know how they work. They don't know what's getting ready to come. They don't understand the halving cycle. They don't understand anything. Like, MicroStrategy is blatantly just buying up as much Bitcoin as possible to get it in their treasury. And people kind of get an understanding of that. It's getting a lot of forward momentum. So that is my Bitcoin play for the traditional side. As a Bitcoin holder, I don't need to necessarily over accentuate that, but MicroStrategy falls into my edict. Either it needs to appreciate rapidly or it needs to produce income. So MicroStrategy is a big deal for my portfolio, and I am rushing to get those 10 shares by the end of the year. That's my goal. And I think I can do it. We're gonna have to actually like trim in some spaces to pull that off. But I want those 10 shares in my portfolio. Like, I do. I want 10 shares of MicroStrategy. Honestly, it's probably gonna round out to be 100. But as I'm getting the initial positions in my long-term holding portfolio, which I'll show you guys before we jump over into Snowball Analytics, the 10 shares is the goal for like the first round of everything. And then we're going to be continuously buying MicroStrategy stock and just in general moving forward. But Misty was running, so I started clipping it. And one of the good things about having analytics software that tracks and projects out your dividends is you can tell whether the moves that you're making are helping or hurting your income. Now, my focus for the income portfolio is exclusively income. So as I was selling off Misty and rolling that into the secondary positions, I noticed my income going down, like by a good margin on a couple of the later plays. So once I realized that, I had to reevaluate, and I was like, you've broken your rule. Like, you're trading these positions like you're trying to make some moves here. Like, you're trying to be the hedge fund bro. And I'm not a hedge fund bro. I'm a good capital allocator. I'm a good financial strategist. I am really good at following a plan. And I'm also really good at halting myself if my plan starts deviating from what the plan originally was, because I don't want this to be a portfolio that I'm trying to do anything but maximize the maximum amount of income out of this portfolio every month, because this portfolio funds my long-term investments as well. It funds my Bitcoin acquisition. It funds managing the debt that was used to originally start the portfolio, as well as the medical debts that we have. So I don't want this portfolio specifically doing anything but kicking out as much money as possible. And the moves that I was making were not aligned with the goal and the intent of the portfolio. So we had to nix that idea. So then I started looking at it and I was like, well, if Misty's my strongest payer, then realistically, I should probably just focus on having a really, really big position in that, and then having like a bare minimum in that. And then off of that bare minimum, if there is a play to be made, it's over whatever said bare minimum was. So the adjustment that I made was I wanted to get 500 shares of Misty. Now, as I continue to accumulate Misty, because anytime it drops, so which 500 shares at the time of the purchase made that allocation roughly $15,000. As you can see, I've got it highlighted right now. It is sitting at 14,194.92, which means that the next cash infusion that goes into the portfolio will be going into that position up until we get it to at least 14.5 or 15. But the way that this portfolio, this specific position fluctuates, I wouldn't be surprised Monday if we're back at 15,000 or around there at open of the day. We'll see what Misty opens at. Again, they don't know how to value crypto stocks, so they announced that they were getting ready to buy a bunch more Bitcoin, and that was taken as not the greatest news, because that's not what the traditional finance market wants to hear, because they don't understand how Bitcoin works. I understand, but they don't understand. Those of us in the crypto space, we understand. But what that gives me is a buying opportunity, because this is a payday week, which means I'm getting another share of Misty. The other goal for my portfolio, now that we've got this position, so the minimum that we'll have is $500 or 500 shares of Misty. Once, if I buy up and I hit 600, that becomes the new minimum. As soon as I get to a round number, the only thing that I'm going to allow myself to trade off is the whatever's above that round number. So right now, the floor for Misty for me is 500 shares. If we have dips, obviously we dip, we'll buy more. Will we have run-ups? If it gets high enough, we might sell off. It depends. But the focus of this portfolio for this phase one is my Misty, because that's the position that I'm using. It's currently the one of two that aren't on drip right now. Misty is going to pay out. We will use those shares to that money to manage our stuff. So we're basically at a point to where Misty, we're seated with Misty. So like, I'm not having to look at that very much. It pays the end of the month. End of the month, we get that paycheck. It's a third week payer, I believe. It's third week. Yeah, it's third week. Is it third week? Yeah, it's third week. No, it's fourth week. It's end of the month payer. It's a fourth week payer. So now I'm picking positions, because what we're doing is we're trying to get a fat paycheck every week, and I want that minimum to be $500. So the way that I'm doing this in my head, and this is like simple math in my head, I'm going, okay, so we're looking for things that pay out, and we're looking for around $1 every month. Specifically, Ulti is used for reinvestment. YETH will also be used for reinvestment. We started that position. We got Ulti to 500. And then we actually might be pushing Ulti up to 1,000, but I wanted to start getting some YETH shares going. So that's the next runner up, and we're going to try and get 500 shares of YETH. But now I've got to get payer outs for every other week during the month. And so I'm looking at a first week payer, which will probably be going back in on Tesla to do that, but you got to wait 30 days when you're tax loss harvesting. So I've got to wait till the end of this month to start worrying about the first week. But we've got fiat, which is I believe, dividend groups. Okay, hold on a second. So let's take a look here. So, where is fiat? Fiat is a week 3. So, yeah. So Misty's week 4, Fiat's week 3. So that's my week 3 pick. We've nixed Coney, which sucks because there's a couple of other deals in week 3 that I like, but it's what it is. So we've nixed that. Week 2, I am probably going to be looking at NVIDIA because that's one of my long terms. Most likely, we'll see what Palantir kicks out, but I think NVIDIA's pretty solid. It's a stable one, in my opinion. Like the volatility on it isn't that bad. And then we'll probably be doing Tesla for our week 1. And what we'll do is we'll get 500 shares in each of those positions under the assumption that it's probably going to kick out a $500. So like I base my positions on worst case scenarios. And so I'm going to go with this, assuming that for phase 1, we're looking at getting that Misty position solidified. So I needed the 500 shares. We've got 516 shares. We're good on that. So we're looking at worst, like in a bad month of the action on this portfolio will be at $2,000. Now phase 2 will be, then we'll have to go back through and figure out if I want to add additional positions or bulk up the existing positions to see where we're going to land out with getting it up to $5,000. Because our goal is to get this portfolio up to $5,000 a month. And then, once we get to that point, roundabouts there. And so in order to do that, I'm going to have a bare minimum. And that's going, hey, this is a bad month and everything only pays $1, or we're paying a little bit under $1. So for me, it originally was, when I first got into this, it was originally cash allocations to the position. And now I'm understanding why people get into this space and they go, oh no, I'm focusing on share allocations, and whatever the cash value of that is, that's just what it is. It's because then you can project out, you're building your portfolio based on your worst case assessment of like how these products are paying. And that makes sense. It's actually more effective than the way that I started, which was the cash allocation. I told everybody, I was all over Reddit. I do cash allocations. Well, I've given up on that because of the logic behind it, because of what I'm trying to do, which is have within respect, because you can't guess, you can't predict, you can't guarantee. There's no guarantees here, people, of what's going to get paid out. So the hedge against that is you go, okay, well, if I have 500 shares and it pays $100, or it pays $1 a share, that's $500. Or if it's around $500, it's around $500. And you can look at the payout schedule and be like, okay, when this pays great, what does it pay? When it doesn't pay great, what does it pay? And then you do your factor analysis in that. And like, you can take those for, I mean, honestly, you could do a long-term average. And you could base your share price around the averages, now that I'm thinking about it, because all the data is there. You can go, okay, I can look at this for since its inception, add up all the payments and all the number, divide that by the number of months that it paid, and you can get an average out of that and be like, okay, so this average is around this amount. And then you can manipulate the share price, how many shares that you need within that average to hit $500 a month on average. That actually would probably be the most logical way to do this. As it sits for right now, Ray does the old reckless rate and arrow quick math where I glance at all the dividend payouts and I'm like, did it dip below $1? And if so, how much? And then I go, okay, I need this many shares, or I'll base it on the worst payout that it's had, which is another, for me, that's the easy way that I do it is I'll look for the lowest payment. Like, what's the worst month this fund has had when they just didn't know what they were doing, all their calls missed, and they barely got any income. And it's not even a scenario of all their calls missing. It's just like they don't do well. And then I'll base it on that number. And then I go, okay, well, how many shares do I need in this position to go at the worst time that they've paid out thus far that I know of historically? How many shares would I have needed to hit 500 that month? And then you can go with that, which is actually probably what we'll do with our other weekly picks. I'm going to have to go do a little bit more research on that. But I know I want NVIDIA because I had NVIDIA previously, and then I sold it out because I was chasing alpha, which is something that happens to everybody who comes into this space. I'm not immune to it, but I wasn't chasing alpha. I was chasing yield. But now that we've chased the yield, I've got the granddaddy of yield. It's not consistent every month, so I don't think we're going to get $4 this month. But what I do believe is this position is solidified. I've got my 500 shares. I've got over 500 shares. We'll keep creeping that up as we have these dips. And yeah, we'll just keep buying into it. My week 3, which is the next in line, is going to be fiat, which is a hedge. That's a hedge against Coinbase. Since that stock can't act right, this actually, we've seen a little bit of appreciation since I bought it, which is cool. Yeah, this is going to be a hedge for my week 3. QQQY will be getting traded out. I believe that I'm probably just going to go all the way down the rabbit hole and throw YMAX in there instead. The dividend on this is not staying at what it was before they did the reverse split. So the dividend's actually been cut in half. And while it doesn't really matter because this is going to be on basically indefinite drip because I do have margin on this account. So this was going to be like a stabilizer and margin, but I'd rather do YMAX than this because the dividend's better and it costs less. So I can get more YMAX, get more of that weekly dividend, get a better payout. YMAX's products are kicking butt. I enjoy them. I'm using them already. So for this portfolio, we're going to have the YMAX sitting in there as a consistent growth mechanism. Like this is one that I am going to just indefinitely drip most likely until it gets to $100 a week, which probably is going to be a while. And it'll be switching to YMAX. I'll probably be doing that open a business Monday. I don't like doing a whole bunch of position moves around election time. I was going to wait until after we start getting some results in, and then we'll see what administration we get. One of the things that I like to explain to people is those of us who are in the market, those of us who are acquiring assets, those of us who are financially literate, we win either way because regardless of which administration we get in office, the debasement of the dollar is not going to stop, which is going to benefit asset holders and those at the top. They're not going to shut down the stock market. No administration has shut down the stock market. That's just not their intent. Their intent, regardless of how they frame it, they're going to debase dollars. They're going to print money. It's going to make asset holders and those who have wealth, they're going to benefit. So I always tell people we win either way. We just might not like how it goes. So with that, and the thing that I'll follow that up with is cast your vote. Don't join a team. Don't join the team. Just cast your vote. Like everybody should be voting on what's best interest for them, what they believe is the best interest in the direction that their community should go. That does not mean that you have to join a team. We're supposed to be debating policy, which is unfortunate that we've moved so far away from that we're not talking about policy anymore. We're talking about how people feel in the vibes. And I don't like people. And I don't like what she said. I don't like what he said. Orange man bad. Like, that's not policy. We should be looking at policy, what you're trying to get done within your community. And honestly, more important than the presidency, your local vote matters. The stuff that goes on in your school matters. The way that your school board is run and the people who embody that school board and what they believe to be okay matters. Potholes in your road matter. So cast your vote. Don't join a team. Remember, those of us in the wolf pack, we win either way. Moving on. Okay, so we're going to be swapping out QQQY for YMAX. For YMAX. And then obviously we're working on the week 3. That'll be the next position that we fill. I'm just going to go ahead and backload this because I don't care about the weekly income as much as I care about, well, the way this portfolio will be when it's finalized. Weekly income will matter, but the caveat here is you'll notice that I'm only going to have one position in here that spits out weekly right now, because generally speaking, that type of income doesn't matter. But since they made YMAX pay out weekly and had to reallocate their individual ETFs to facilitate a weekly payout, it does matter to me now, because strategically, if you can get one big check every week, then like now this account becomes a weekly payer, along with the YMAX in there also paying weekly. So that's the game that we're playing. That's where we're at with that. I do want to show my long-term holding portfolio. That's going to be an interesting one. Because we've been making moves in here. So now, as you can see, this portfolio is up. Now, this one is about growth. This is about long-term holdings. I do have one ETF position in here, though, that produces income and is also going to be dripping. And that is GPIQ. That's a new ad. And then where am I? Oh, the equities are hidden. There we go. But GPIQ, we're doing an ad on here. We're going to be dripping this until it's spitting out about $500 a month, at which point we will use it to help fund our long-term holds as well. And this will be dedicated to long-term holds in here. Also, we're still sitting on our DEF, DeFi technology position. We are looking at getting 1,000 shares. We are currently at a total of 581 shares. So we got a little bit more legwork to go. I'm trying to get them all under $2, and we're currently in a dip. So we're hopefully going to be able to do that. Also, we have started purchasing MicroStrategy. We are at 4 shares. I've got 6 more shares to get before the month's over. Normally what I've been doing is every paycheck I get, I buy a share of MicroStrategy. So that's 2 shares a month minimum. On my DeFi payout, the one that we're using to manage the debt and stuff, I buy a share of MicroStrategy. So we've got 2 more months. I should be able to get those last 6 shares. I might rush it a little bit if we get a good tasty dip, but like when they did the split, I thought I was going to be able to get this before it got to the levels that we're currently at, and now they're at the levels that we're currently at. We did not get the hardcore halt of momentum that we've gotten on every other stock split. Like, it did not kill the momentum on MicroStrategy one bit, which is wild, but I'll take it. I mean, it's a good indicator. We're going into a bull run, and I want to have at least 10 shares rolling into 2025. So that's what's going on with the long-term portfolio. Obviously, you'll see this clip up a little bit every month. I normally try to grab at least 100 shares of this throughout the month at some point. And then MicroStrategy, we hopefully will be getting, by the next update, we'll be at 7. That's the goal. So we'll see. I mean, I mean, we got the election coming up, so this could just go bananas depending on who wins. Now we're going to jump over into Snowball Analytics, because I like to give you guys the receipts before we get into the candy. So what were the effects of the consolidation into MicroStrategy? So first and foremost, we'll look again, sitting under 20. We got the shares in there. Total profit, we are up 16.2% when you factor in all of the dividends that we've collected. Now, the portfolio obviously is heavily consolidated into MicroStrategy, into Misty right now. So Now it's just a big old blue pie. But as we're looking down here, what did we do? So this month we had a record month. We were at just under 29K now, or just under $2,900 dollars, because we consolidated a Misty. Now, the accidental move that we made doing this is the interesting thing. So, like, as I was consolidating down, I was waiting until I got paid my dividends on the projects that I was consolidating out of. And then tax loss harvested the exit on those positions. So when we consolidated out of Tesla, we got our $111.68 payout. And then when we consolidated out of Coney, we got our $240.83 payout, and then moved into Misty after the fact, which was accidentally genius of me. And so, like, now when we look at it, so after it updates, now we'll see what it's going to project out moving forward. So, like, right now it's projecting us at $2,600 a month, which would be awesome. That would be pretty cool. That's what they're projecting us at right now. These numbers are subject to change. I don't know that we're going to get another $4 payout, though. So I think the Misty projection is high. That's what I'm thinking. I know that we're going to have a dip off from the 2,900 that we got because we're not in those positions right now, but driving the Misty position up could, help out a little bit. But we are at 52% to our goal because we're looking at making this portfolio pull in $60,000 annually. We're 52% to the goal. Now, this is saying that if I just reinvested and didn't touch this portfolio, so if we didn't have the debt and this portfolio could just be left to roll in on itself, and I just turned drip on for a year and looked away and just kept adding in and buying as I could, which is on the schedule that I'm on now, we could hit our goal in a year if I could hunker down. Unfortunately, we have debt to pay back. So from that perspective, it's just like, that's not going to be a possibility for me because I don't want to manage this debt out for a year. I want the debt gone. I honestly wanted it gone before the bull run, but we had injury and we added over $10,000 to it via injury and car troubles. We could afford it, but I didn't want to liquidate assets to do that. And also we're trying to get rid of this debt without getting rid of assets. So this is kind of the way that I like to look at these portfolios, and kind of it gives a glimpse into how I'm utilizing the space. But the thing that people have to understand is it's not a set in stone cut and forget. It's not like I have the best ideas. I get a lot of ideas from the family, brothers in arms, I like to call them, over on Reddit. I'm constantly taking in content from the other content creators that are documenting their journeys. I'm urging everyone who's in this space to document your journeys, because there are so many people that give so many horrible takes or have horrible misunderstandings about what these products are used for, how they're supposed to be utilized. And they're normally people who either have an opinion because they're emotionally attached to a strategy that they were given that worked for them, or actually, if there is no or, it's basically that, because these arguments should be about math. Is the income coming in? Are they paying out? Oh, well, you can't do that forever. Like, oh, well, you can't do anything forever. And I see people all the time who invest in terrible companies and they don't even reevaluate them every year. And you just keep a dud hoping that it does better and eventually, with no information about it. Like, I'm not talking about like holding Bitcoin during the bear market and continuing to accumulate because long term it's on a hockey stick up indefinitely. I'm talking about like people who don't show their portfolios. They don't want to show any type of negativity on any of the decisions that they've made. And it's like, if you were making perfect pro decisions, then you wouldn't be selling stuff on YouTube to people. Let's talk about it. The the reason I like this community and the reason that the high yield dividend has really, like, I'm defensive of it. Honestly, I'm the same way that I am about Bitcoin. Like, if you talk about Bitcoin ignorantly, I'm going to come for you. I'll make a video. I'm going to tag you in it. I'm going to talk trash about you. I'll make you change when you do your live streams. I'll be on your neck. And I'm starting to get the same way about high yield dividends because the conversations aren't math based. It's just some, oh, well, that's too good to be true. Oh, that can't work. Oh, that can't work. Like, oh, yeah, you know what else they said? MicroStrategy a decade ago wasn't going to outperform the entire S&P 500. And yet here we are. They're doing it. They're beating everyone, including NVIDIA, which is everyone's crown gem in the TradFi space, because you're ignorant of the products that you're talking about. Like, you just don't know. And if you don't know, that's fine. But, like, do some research. Test it. Like, I don't know what to tell you. The numbers are the numbers. I'm showing the receipts. The account actually exists. Showing you the analytics software that actually pulls out and factors in the dividend payouts. Like, that's the end of that conversation. You don't have to like it, but, like, at least in the interim of right now, it's working. If the debt gets paid off, it worked. If the house gets paid down, if my mortgage gets paid down to $20,000, which is like a nothing payment as far as like what you have to pay for your mortgage every month so that you can have them do your taxes for you, which is my goal, it works. If I get that long-term investment for portfolio that's growth-based, funded off of those dividends as well, it works. If I can accumulate another Bitcoin, it works. Like, we're sitting good over here, bro. Like, that's the thing. And like, nobody wants to have the actual conversation. They just want to say stuff doesn't work and then tell you that you're going to have to work your body until you're 65 and then get 10 years and then die. Also, they're going to sit around here looking dysgenic as hell. Like, let's talk about it. These people they're not healthy. And they want you to work till you're 65 and not healthy as well. Like, let's be honest. Like, let's talk about it. Like, it's wild. Like, these people don't have good existences either, which makes it makes sense on why they're hating on stuff. Like, I don't hate on people who are attracting growth. I have a portfolio that's growth focused. But if you're going to talk about income and you're talking about dividends, but you want mediocre both, you want mediocre growth and mediocre dividends, and then be mad when somebody goes, yo, like, my portfolio that has $20,000 in it makes more than that a month. Because it does, with receipts, math. And then you want to just poo-poo on it or get defensive. It's like you're emotionally attached to your investment. And like, you could be retired already. If I had 5x what I have now, then like, I technically could not have to go to work now. And the way that I set my stuff up, that also includes reinvestment and investment in the portfolio. I don't know. Like, I'm just saying, math, efficiency, and efficacy. But that's what we've got for the portfolio this time around. I don't know what else to tell you. Like, it's interesting. It's wild. I love it. I hate it. I don't hate it because I like the discussion, but it's like the gurus also don't want to debate. Like, I'm getting ready to bring back a live stream every week, and I would love to talk to some of these guys and have an actual math-based conversation where it's just like, okay, do the math on that. How does that work? Test it. Oh, well, because the only thing that they can do is be like, well, we don't know how it's going to work out in the future. Be like, you know what? Who else said that? Everyone over a decade ago that talked about Bitcoin. And the funny thing is, it's all the people that these TradFi guys look up to that said Bitcoin was terrible. And they were like, look at what Jamie Dimon said. Look at what Peter Lynch said. Look at what all these people said about Bitcoin. They're poo-pooing on Bitcoin a decade ago while they were buying Bitcoin themselves. Like, they were actively investing in the market. And then like, we fast forward to now and people are like, oh, we don't have enough data. Like, 15 years is a good amount of data for you to sit there, pass up the best performing asset that's ever existed. And then the only thing you can do is just hope it fails. And that's the thing that we've got to understand. And it's the same vibe that I got when I got into crypto is the same vibe that I'm getting with these high yield dividend accounts, with these products. People don't know that it's going to fail. Oh, that can't work. Oh, you're going to lose all your money. Oh, blah, 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 blah. NAV erosion. Nah, you're just going to go to zero. But what they're actually doing is hoping it fails, or hoping that you give up on it so that you just stop talking about it, because it's way more effective and efficient than what they're doing, that they're emotionally tied to, because this is the way we've always done it. Tradition and common sense are enemies, man. They hate each other. And a lot of people invest off of tradition because this is what we've always done. Oh, just put all your money in your 401k. What if you want to retire early? You got to fully fund your 401k first. Why? Why? If your goal is to retire early, why? Because tradition says that's what we're supposed to do. Common sense would say otherwise. And they hate each other, because it doesn't make common sense if you're trying to retire early to put all your money to save some money on taxes in something that you don't have access to without extreme penalty until you're 65. It doesn't make sense. And it just doesn't. There's literally no way around that, unless you are now producing so much income in your portfolio that now you're kicking up into other tax brackets. So now you can max those things out. And the funny thing is, most of the people who are telling you that are rich. They're in those 1% tax brackets. So it does make sense for them to fully fund their 401k, because they're making so much money that the only thing that they can do now is start hiding money from the government from taxing, which makes sense. It does. After I get to my 60, after I get to 100% in this portfolio, if I choose to continue to work, everything's going into my HSA and my 401k, because it'll lower my tax burden. Because at that point, my check becomes fund money or investment money. Like, I'll probably be investing half of my check, and then the other half of it'll be fund money, and I will fully fund both of those things. Like, I'm actually probably gonna, because I'm getting ready to stop funding my 401k. Period, because only reason it's still going is because it was on at the beginning of the year. I can't turn it off. But as soon as I do that, I'm probably going to kick over to fully fund my HSA, because that money I can invest myself. I can get some of that money into the market after a certain point, and I'm going to do that. And then while I'm doing that, I'll be feeding the machine. But we've got to move with intention and some sort of semblance of strategy, because what we've just been told to do doesn't necessarily work anymore. And we got to start questioning stuff and testing things. Again, like I said, we're looking at 36 months. I'm going to be in a work optional state. I don't need a 401k, but I will if I choose to continue to work, and I'm gonna need those shelters. It will work as a shelter. It will make sense as a shelter. Go ahead, feed me to death, because I'm not gonna need that money, because I'll retire when I'm ready at that point, which is gonna be early, and I can just go get some walking around money, and I'll fully fund all my stuff. It's just what it is, because I won't want to pay those taxes, because I'll have income coming in elsewhere that isn't me going to work. So we've got to keep these conversations going, and they need to be had, and there needs to be that pushback, and there needs to be that friction, because that's where you're going to get the best ideas. That's where you're going to get the paradigm shifts. And that's where most real people like myself, like those of you watching these videos, I mean, it's a small tribe over here since we relaunched the channel, but I've also got, like, if you look down on the page, my main channel with all the older videos that I've done is down there if you guys want to tap in. Now, it gets spicy over there because I be on panels arguing with people about other stuff that's not financial related, but from a financial perspective. And for those of you who are in on that, definitely tap in, because I'm active over there as well. But it's just that channel, this content wasn't going to get out into the ether and be able to help people over there, because my channel is consistently shadow banned and they don't want people to look at it. So anyways, until next month, people, this has been the portfolio update from October 2025. Tap in with me. Let me know your thoughts down in the description. Was it a genius play the way that I consolidated down into Misty, or nah? Do you still think Misty is trash? Is Misty not gonna perform? At what point does Misty go to zero for my detractors? Or if it is trash, explain yourselves, because Misty is that specific product, even though it's not supposed to, is obliterating its NAV erosion. Just saying, because numbers. But till next month, people, this has been another episode of Portfolio Updates, and we are out.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.